Today I'll be interviewing Mark Abbs, partner and head of the global mobility team at Blick Rothenberg. We'll be discussing hidden tax risks for HR. Are you ready for the changes? So Mark, I understand there have been a number of recent changes to the rules on tax risks, such as the new Criminal Tax Evasion Act, that will impact many organisations. Can you tell me more about these, as they haven't been very widely publicised, have they?
Yes, that's right. There have been a number of recent changes that impact organisations and their various compliance or tax compliance obligations for workers. For instance, the recent Taylor report looks at employee status and really trying to review whether an employee or a worker is regarded as self-employed, or they have a personal service company, or they are a genuine employee, because the perception is that there's a loss of national insurance. And the cases you may have seen or heard about is the Uber case, where taxi drivers are claiming rights as employees. But the consequences of these sort of changes in practice and how the government is starting to review these with organisations has gone very quiet. But we are starting to see clients with a number of these reviews now, where HM Revenue and Customs do ask a number of very straightforward questions. We had a client recently where they'd had a worker for many years and who they thought were quite clearly not an employee, and HMRC actually produced an employment contract from 20 years previous. Now, we haven't seen the authorities have that sort of capacity to pull out records for a long time. Now, the main notable change, I would say, that's gone unnoticed is to do with the Criminal Tax Evasion Act. And this is effective from the end of this month, the 30th of September 2017. And really it's taking things to a new level. It's looking at when tax or reporting hasn't been done correctly by a company, and this applies to employees. But it's taking it to a level where an employer is responsible, or an organisation is responsible, where one of the employees or their advisors has ignored a particular tax issue, so turning a blind eye. And now the challenge will be there could be unlimited criminal penalties. So there really is time now to act and to get a grip on some of these issues.
Are there particular organisations and HR teams that this is especially relevant to?
Yeah, the criminal tax evasion provisions can apply to any form of tax, but I'm particularly focused on the employee side of an organisation, and this could be both UK-based employees, so have you reported their benefits and expenses correctly? Have you engaged someone as an employee rather than as a self-employed person? But equally, it can apply to your globally mobile employees, the directors of the UK company that live overseas, or it might be people that visit the UK for short periods of time, your business visitors, and equally your expats. And we do find that this particular group are a lot more complex, even though they're much fewer in number. And we also find organisations, international organisations with smaller groups of high-risk employees with only a small amount or even no internal expertise in the HR teams, particularly struggle with some of this. Either it's very complex, so they're not sure what to do, or they try and do it themselves internally without seeking the right expertise, or they don't have the right experience. And of course, the smaller organisations or larger organisations with small groups of employees at risk just don't have the scale either, so they might be coming across a problem for the first time, whereas the larger organisations might have in-house experts, or they might have done some of this several times before. So yes, it's really international organisations with less familiarity with some of these issues.
Why is it so important, therefore, that HR identify and manage their employee tax risks?
Well, with the criminal tax evasion, it's quite simple. There are unlimited criminal sanctions coming in on organisations that don't get this right. And that's a huge departure. I don't think we've had anything like this before. Just risk generally with this and the other changes, typically we'll see three risks. You've got the reputational risk of an organisation, and where these types of issues reach the media, clearly an organisation that does not seem to be managing its risks effectively is frowned upon by shareholders and also by the public, and can sometimes have a serious impact on the share price. You've also got a financial risk. So where the authorities find an issue and you need to correct that, then they will typically go back 4 or 6 years, and you'll have to pay back taxes on this. And these things can really mushroom. There's a particular vagary relating to reporting shares correctly for employees, for instance, which you can actually have a penalty of 100% of the share gain. So when you've got senior executives with £1, £2, £3 million worth of share gains, if the penalty is the same amount and the organisation also has to pay the tax on that penalty, the financial risks are huge, even though it's only 1 or 2 employees that might be affected. And then the third risk that I would outline is those relating to the employees themselves. We've recently heard of a particular organisation where an employee, a UK employee, went to China for a few days. They had a particular type of visa. They stayed on over the weekend to do some sightseeing, and they weren't allowed out of the country because of their visa status. And clearly this had a huge impact on the employee, but also in the organisation. It was turned upside down because of the surprises, and there's all sorts of different risks. But certainly the criminal sanctions is one that should really wake everyone up, but also reputational, financial, and the impact it can have on employees as well.
What are the common myths and traps that you see in HR and organisations fall into?
Good question. And if I relate those to those organisations that may have less expertise in-house or just fewer groups of employees at risk, then one of the myths is, well, we've only got 1 or 2 employees that visit us from overseas and only for a short periods of time. Well, that's a myth because HM Revenue and Customs may require a UK organisation to act as a host employer for that visiting employee, even if there's only 1 of them, and even if it's only for a few days here and there, and they expect you to operate some form of payroll reporting. There is no de minimis. So I think that's myth 1. Don't ignore things just because they seem quite small and trivial, because then there's often not a threshold or a de minimis according to the tax authorities. Another myth is to try and oversimplify issues. So one we're seeing a lot more of at the moment is in relation to reporting business expenses for employees. And it seems that many organisations think because an expense is incurred during business time by an employee, therefore it shouldn't be an employee benefit. But actually, unless certain conditions are met, if an employee is at a conference with their client and the client goes to bed but the employees continue drinking in the bar, that's no longer a business expense. It could be staff entertaining, which should go on someone's P11D, or as a minimum a PSA where the company pays the tax on that. So sometimes there's a myth that it's only a trivial matter, let's not worry about it, and so there's an oversimplification. Another myth, of course, is, well, we won't get caught, and that may be true in the past, but we are seeing HMRC being more and more active with companies. We're seeing an increase in both payroll, pay-as-you-earn type audits, where a revenue officer will send an innocent letter to the HR team saying, we're coming in to review and we're going to ask you some simple questions. And those simple questions can often distort into quite big issues, particularly around employee status, visitors from overseas, and how termination payments are reported and the tracking of share options. So it is possible to get caught, and I'm not sure that's a good way to deal with things. And we just don't know how the authorities will deal with this new criminal sanction, whether they'll be incredibly aggressive or it will take a while to filter down. But our recommendation would be some of these things are quite easy to fix. So thinking that you won't get caught is probably not a good strategy. And just on the overseas part, we're also saying a number of jurisdictions, tax jurisdictions in other countries, and this applies to international organisations based in the UK, where they're also taking a more assertive or aggressive or more detailed look at some of the employees visiting their jurisdiction. So Germany and Ireland actually have recently said that if someone, a UK employee or any employee from outside those countries, visits for more than 30 days, then the visiting employer or employee has to operate some form of payroll reporting. And we've also seen France recently, where if you don't have an exemption certificate for national insurance when you go to France, then they'll fine you a month's salary for not having the right paperwork in place. So I think myth 3, not being caught, the net is closing, and it's just not worth the risk. So I'd certainly just work on the assumption that you may get caught.
Do you have some really practical advice and tips that you can share on how other organisations you are working on... Oh, let me start that again, sorry. Do you have some really practical advice and tips that you can share on how other organisations you're working with are dealing with these HR issues?
Yeah, some of this is actually very straightforward. It's just being able to find the time, because everyone is stretched and there's so much going on. But I think with some of these changes, again, particularly the criminal one, it's worth. We recommend to organisations a really straightforward 4-step approach. I think the first one is to really review what the situation is within an organisation. Almost do a stock take. How are you recruiting workers? Are you just, without thinking too hard, just bringing them in on whatever status they want, either as an employee or as a consultant? Or do you have your own policy and you're comfortable that you're doing things right? But I think you really need to take a risk assessment and take a look at what's happening now. And sometimes an independent, fresh pair of eyes can see things differently. It might be that you've been doing things for many, many years, and you might be blind to the way you're doing them. So that would be step one, and I think it's important and probably very realistic not to expect organisations and very busy HR professionals to try and deal with all the issues that are found all in one go. Some of them might be trivial, some of them might be minor or major, but I think as part of this review, I'd also set some priority. What are you going to try and deal with first? Break it into bite-sized chunks. What are you going to do this year? What are you going to do next year? So that would be step one. I think step 2 is then you need to do some communication. Having the buy-in from senior management is very important, that as an organisation you're not going to turn a blind eye to this compliance, and you do take risk management very seriously. And communicating to the line managers, those individuals that have got the day-to-day responsibility for some of these employees. And then ultimately some training, making sure people understand what's required of them. So definitely communication is number 2. Then I would just say fix the issues effectively. Don't put your head in the sand, deal with them now. If you follow the priority route, it will be a lot more straightforward, but do fix them. Don't procrastinate. If you've got a problem with employment status, put in a policy and say what that is, and start going forward, making sure that when you engage someone new, that they follow this process, and that you're not continuing any bad practice if that's what you've found. And if you've got any skeletons in the closet, deal with them. I would say that's number 3. And then finally, number 4, don't sigh of relief when it's all done, because things change, rules change, particularly in the tax arena. The Chancellor of the Exchequer is always changing the rules on tax and what's required of an employer in terms of reporting. Teams change internally, so one group of people may know how to worked and followed a particular process, but if that team's change, have they passed on the correct knowledge? And of course circumstances change as well. You as the organisation, things might change, your priorities might change, and strategy. So the fourth one is, once you've gone through this circle, is to make sure you continue to monitor the changes you made on a fairly regular basis, just to nip and tuck, to make sure things stay on an even keel. So they would be our 4 practical tips.
Great. Thanks for joining us, Mark. Have a good day.
Thank you very much.